Hello, hello, everybody. It is Travel Talk Thursday. Tuesdays, I can no longer go live because y'all know my daughter played basketball. So we're moving it to Thursdays until basketball season ends. And as promised, I have a special guest who will be talking about most people's favorite topic and a little funny, a little sarcastic taxes. Okay. So, what I'm going to do is I'm going to let Miss Atiya Brown, who is with the Savvy Accountant, take it away. And what I want to know from you is introduce yourself, tell us who you are, what you do, and how you got started as a CPA working in taxes.
All right. So can you hear me okay?
Yes, yes, I can hear you
Awesome.
great.
So thank you so much for having me. Sorry that I sound a little different, but I'm a little bit under the weather. But my name is Atiya Brown. I am a CPA. I'm licensed in both Canada and in the US. I'm originally from Montreal, but I've moved to the US about 18 years ago. And I'm the owner of the Savvy Accountant. So the Savvy Accountant, it's a full service CPA firm where our tagline is we are savvy at solving your tax issues. We have a goal to save our community $1 billion in tax savings by 2050, and we've saved our community over $7 million so far since 2021 when we started tracking. And so my goal is just to help people in my community understand taxes better so that they can build wealth by reducing their largest expense, which is taxes. So if you don't know by now, taxes is going to be the highest thing that you pay in your lifetime. And so I want to make sure that my community understands how to reduce what they actually pay.
Wow, that is impressive. So repeat that number for us again. You want to save how much?
A
How much have
billion
you?
dollars. So I want to save
Oh,
$1 billion by 2050, and we've saved our clients over 7 million so far. So we're on a goal to kind of extrapolate, like we want to like multiply like 2x every year so that we can get to that $1 billion by 2050.
oh my goodness. That's well. I don't know anybody out there is excited, but as a small business owner, I'm super excited for her to share that stat because, of course, when it comes to Uncle Sam, we are trying to make sure that we are not overpaying or we are,
Exactly.
we try to keep as much money as possible. So that is
And that's
amazing.
the goal. Yeah.
Awesome, awesome. Okay. So, where are you based at? Like, far as client wise, are you able to? You mentioned that you are licensed in Canada and also here in the USA, but you're based here in Dallas, right?
Yeah, so I'm based in Dallas. I have a satellite office in Florida because we're new to the Dallas area. So I have a satellite office in Florida, but we service clients across the country because of the work that we do. Because a CPA, I can service clients across the country. So we have clients in every state, so we can work with anybody anywhere.
Okay, good, good. And I figured that based off the little limited
Yeah,
information I know about taxes.
yeah,
Um, Okay, great. Okay, and then one thing that you said to me that stood out because I know that there are so many people, especially during these days doing taxes. You are a CPA. So,
yeah.
for someone who does not understand what a CPA is, could you kind of break it down in layman's terms?
Yeah, so a CPA is a certified public accountant. And what that means is we actually are licensed by our state board to perform certain tasks. So only a CPA can audit your financial statements. And what that means is it basically gives it verification of what those numbers are being reported. So public companies have to have audits. Obviously, private companies do not have to have audits, but if you are working and you need like regulated statements, you might need a CPA to audit your financials. So sometimes in real estate, they're going to need audited financials to prove what the brokerage firm does. So only a CPA can audit financial statements. When it comes to taxes, and if you're having tax issues and you need someone to help represent you before the IRS or your state board, you're going to need to work with an attorney, a CPA, or an EA. So those are the only three people who can represent taxpayers if they're having any issues and they need someone to basically speak on their behalf in front of the IRS or their state.
Gotcha. So let me see if I know this right. You said an EA. So an EA is an enrolled agent.
Yes. So an EA is an enrolled agent. And so an EA is essentially a test that you do through the IRS, and then they allow you to represent taxpayers for their tax issues. So when it comes to taxes and tax issues, it has to be an attorney, a CPA, or an enrolled agent.
Okay, awesome, awesome. Okay, so hopefully y'all learned something from that. And if you catch this on replay, make sure you comment so that I know that you have watched this, because I know some of y'all are in between work, you're busy with the kids, and you might catch this later on. So if you, anything she says, if like a question comes up or something like that, make sure you comment, and then I will send her all the questions. Okay. Okay. Awesome. Awesome. Okay. So what inspired you to focus on taxes and financial education? And how long have you been helping people prepare for tax season?
Yeah, that's a good question. So, truthfully, I've always loved numbers. And so I actually went to university for actuarial sciences. So that would have made me go into kind of like the insurance world, like underwriters and just figuring out the statistics and stuff. And when I was in college, I'm an extrovert. And so, frankly, I was in the rooms with the people in my program, and I was like, oh, they just seem boring. This doesn't seem like it's going to be fun. And so I actually took my first accounting and tax class in university. I hadn't taken any before. And my first tax class was taught by a professor, and she had her CPA license in Canada and in the US. And she was like, oh, I want you to try out for this team. And I was like, okay. And so what the team was it's a competition across universities across Canada, and it's a team of 3 people, and you compete against other universities. And so we were competing for the tax team, and we came in 3rd place our first year. And
Wow.
That's when I fell in love with taxes. That's when I realized that I love taxes, the way that the situation is different for everybody, and how you can take the tax law and apply it to different scenarios. And basically winning this case competition, we got several cases. We had 3 hours to prepare our presentation, and it was just fun. I was just like, oh, but we can use this tax law. And so I just fell in love there. So it was like later in life that I realized that I was good at this. So that's kind of where it stuck.
Okay, awesome. So you are a numbers girl. So
yes.
So in school, prior to you entering college, like were you like a heavy math person?
Yes.
Like who was okay?
So
yeah, makes
calculus, statistics, all of those good things. Algebra, I loved all of those classes.
Oh, okay. Makes sense. Yeah. Makes sense. And how long have you been helping people prepare for tax season?
So I'm in my 8th year of business on my own, but I started in the industry about 17 years ago. So I've had my license for over 18 years, and I started working at KPMG 20 years ago. So I started my career at KPMG, and I worked there for about 8 years. And then I went into private industry, and I worked for a bank, and then I went on my own. So I've been doing it on my own for 8 years.
Nice. So the transition from the bigger company to the bank to your own company, was that like something you set out to do when you first got into this field, or like how did that happen?
Yeah, no, that's a good question. No, I was climbing the corporate ladder. I thought I was going to get the corner office. I did not have there was no dreams of having my own business. It was climbing the corporate ladder, going, and then one day, our bank merged with another bank, and there was departments merging. And so I got laid off because there was a merger, and our department got swallowed up. And so that sucked, getting laid off for something that you didn't do. So it wasn't like it was bad performance or something. It was just, there was a merger. So I got a good severance package, and basically I didn't like the feeling of getting laid off. And so I decided to see if I can go out on my own. And truth be told, this was maybe 12 years ago. I actually got another job. So I'll just be honest, being an accountant, I don't know what the industry is like now for corporate, but I was able to get another job pretty easily. But I started building on the side and just kind of seeing how I can do this on my own, but I still had another job.
Okay.
So I didn't go full time. I didn't go full time until 2021.
Okay. Oh, interesting. So
yeah.
Okay, so you went full time 2021, and that was COVID was still around, right?
It was definitely COVID. Um, it was definitely COVID. So I decided to go full time. It was November 2021. At that point, so a little background: we do move around a lot. My husband's job moves us on every 2 years on average, and so this one move, I got a job at another corporate office,
Okay.
and because it was COVID, everything was shut down. Everybody was working from home, and it was just kind of like a toxic environment. And so I was like, well, my business was picking up, and I hadn't been there that long because we had just moved, and so I was like, yeah, I don't think I'm gonna keep this job, and I think I want to see if I could do it on my own. And so I left that job, and then I went full time.
Nice.
That was probably the only toxic work environment that I ever had, though.
Well, that's reassuring to know, because
Yeah.
if you talk to some people, they'll probably tell you that, every
Yeah.
career they
So
had.
I've been blessed, and that was the only toxic one.
Okay.
But it helped me go full time. So,
Nice. So, of course, we're still in 2025, and we got
Yes.
about 12 or 13 days left, but who's counting? And as you're about to come into one of your most busiest tax seasons with the, introduction of 2026 coming. What is the biggest mistake you see people make before they even file their taxes?
Yes. So that's a great question. So I have a few mistakes that I see people make. And so I think one of the biggest ones, if I'm trying to choose one, is just not knowing their numbers. Because I think a lot of people don't realize you need to know your numbers, what you made in income, what you spent in expenses. Because if you don't know that foundation, your taxes are going to be wrong. And chances are they're going to be wrong in the wrong way for you. So you're going to be overpaying. So when business owners don't know what they actually made or what they spent, that's kind of the biggest thing, where they rely too much on the statements that they're going to get. So
Right.
if they're used to getting W-2s and they start their own business, they kind of forget that you're the one that's supposed to be tracking these numbers now. And so one of the things that I tell business owners when they're starting their journey on becoming a business owner and paying taxes for the business piece is that they need to know their numbers. So they need to be able to say, this is what the business made, this is what we spent, because chances are they're going to remember what they made. But if they don't remember what they spent, they're going to be paying taxes on what they made instead of it being what they made less their expenses and then that net amount. And so that's how they overpay on taxes. I think the biggest thing is not knowing your numbers, because I get it. Numbers are not everybody's cup of tea. So people, they get anxiety, they just ignore it and all of that stuff. But the end result is that they overpay in taxes because they don't pay attention to what their numbers are supposed to be.
So one thing that you said that stood out to me is knowing your numbers. And so if somebody was new in business, or even if it was a seasoned entrepreneur, like what's like a easy fix or something easy that you can tell them to implement, which could help them out? I mean, I know this is the last month of the year, but.
So some tips that I give to small business owners, create an email address that says receipts at your business name. And what this is going to be for is going to, every time you get a receipt, you're going to take a picture of it and email it to that email address. The reason that you do this is because, one, they don't make receipts like they used to. I don't know if you've kept a receipt for longer than 7 days, but it's like they use disappearing ink now, right? I don't know when they started doing this, but back in the day, you could have taken all of your receipts, put them in a shoebox, and brought them to your tax preparer at the end of the year, and they could have figured out all of the expenses. Now, that's going to be a bunch of blank paper because the ink is going to disappear. You're not going to know what it was for. If you don't know what was written there, how are you supposed to get the deductions, right?
Right.
So by creating that email address, you actually create like a digital file cabinet, because the email is going to have all of these receipts. So you're going to be putting what the subject is, and then you can search every time you need to figure out what your expenses are. So that's something that I tell business owners to do, because far too often people think that they're going to remember things, but they're not. Like, I don't remember what I spent last month, let alone what I spent 11 months ago. Like, I need to know that everything is tracked somewhere because I want to be able to claim these expenses. And so business owners need to be aware that the government allows you through the tax code to write off all of the expenses that you incur for you to run your business. But the government is not going to force you to do that. Like, they're not going to say, okay, you made $10,000, but didn't you spend $6,000 to make $10,000? So that means you only should be getting taxed on $4,000. If you have $10,000 less $6,000, and that gives you $4,000. But if you don't track that $6,000, the government is not going to, like, they're not going to care. They're going to say, okay, well, we will gladly tax you on $10,000. It's up to you to let us know that you spent $6,000. And if you don't, then you're going to overpay on taxes.
Gotcha. Okay. So one tip that she just shared, y'all, was, especially if you are a small business owner, is take a picture of your receipts. Because that is so true. Because, like, I got a whole bunch of receipts I keep in my console, and I go back and look at them, and it's gone. I don't know what it's from. I don't know if it's food, if it was gas, if, you know what I'm saying?
Right. And I don't know when they started. Like, I don't know if it must be that it's cheaper. It must be something, because every single receipt, like, if you forget a receipt somewhere, it's going to be like, oh, what was this for? Everything is smudged, and you're just like, okay, well, I don't know what this is. So now you got to throw it away.
Gotcha. Okay. And then I know you said that was the biggest one, but you said you had several. If you could highlight the other ones that you see that's kind of problematic.
Yes.
Could you share those?
Yes. So business owners need to get organized when it comes to their business, understanding where their income sources are coming from. Far too often, the fact that they're just not organized is one of the reasons that they don't know their numbers. So if they are not tracking everything, if they don't have one bank account that everything's going through, then they're going to forget. They're going to be commingling. What that means is mixing the business with the personal. They're going to be paying for things from their personal account, paying for things from their business account. So when it comes time to categorize everything, they're only looking at the business account, but they're missing everything where they paid from the other account. So they need to get organized. And if organization is not your strong suit, that's when you need to work with someone who's going to help you to make sure you stay on track, make sure you are staying organized so that everything is where it's supposed to be. A lot of business owners don't track it, they're not doing bookkeeping. And so I think a lot of people know what QuickBooks is, but I do have to say QuickBooks was created by accountants for accountants. So QuickBooks is a great system, but if you don't understand accounting or bookkeeping, it's going to mess you up. So I'm not saying you need to use QuickBooks. There are other options out there. And Excel is another option that most people have access to, and they just don't take advantage of. Of course, Excel is going to be more manual, so you just have to know yourself. But I don't like telling people which system to use, because if I tell you to use a system and you don't agree with it, you're not going to do it. So I think you should just use the one that you are comfortable with. And if that's Excel, then use Excel. Just make sure that you use it. Because we have a lot of clients who come to us and their Excel is immaculate. Like, they have tracked everything and they are very certain that everything is there. And I'm like, great, because you actually stuck to this. And if they would have probably been told to use QuickBooks, they probably would never have done it, because they would have been like, I don't know how to do this, so I'm just not going to do it.
Yeah, I tried to use QuickBooks in previous years, and it was very daunting for me.
Mm-hmm.
And I was like, oh my gosh, I am trying to use this system. I'm paying them, and it was too much. So of course, like you said, if you don't feel familiar and comfortable using something, you just stop using it. I was just like, okay, I'm gonna stop using it. So yeah.
And another mistake that I think a lot of small businesses that they're making because they don't realize. So the government works on an earn and pay system. Earn income, pay taxes, earn income, pay taxes. A lot of people think that the government only collects taxes at tax time, and that's not true. Essentially, if you're a W-2 employee, every time withholdings are coming out of your check, your employer is keeping that money for you and submitting it to the government on your behalf every quarter. So the government is getting earned income and they're getting their tax dollars throughout the year. So a lot of business owners, they probably don't realize that that's happening behind the scenes when they're an employee. But now that they're a business owner, they might be responsible for submitting what we call estimated quarterly taxes. And those are taxes that you need to submit every quarter to satisfy that earn income, pay taxes, earn income, pay taxes. And so they're not submitting estimated taxes. So at the end of the year, when they owe a lot of taxes, there might be additional penalties for not submitting estimated taxes. So what we tell our clients is to create a separate bank account that's going to be for taxes. And if you can put, we call it our magical rule of 30. This doesn't mean that you're going to pay 30% in taxes, but this means that you're going to have those funds when you do get your tax bill and you have to actually get ready to pay it. So we tell them to put that aside so that they have the money on hand when the bill actually does come due. So that's one thing. Another mistake I think a lot of business owners make is not working with a professional. So not working with a tax professional. And me and my friends have this saying, I have no problem with DIY. I have a problem with DI-effing it up and thinking that you're DIYing it, okay? So there's nothing wrong with doing it on your own if you know how to do it. But the minute that something changes or something that you don't understand, you need to work with a professional. So many times mistakes are made because, well, I've been doing my taxes for 10 years. Yeah, because you had a W-2, you had a pretty easy situation, nothing changed, but now you got a business. So now you have your W-2 and your business. Do you know how to handle that? And if you don't, you need to work with someone, because so many times we get taxpayers coming to us. It's their third year of business. They've made money all the other years, but somebody told them, you don't have to file your business if you didn't make $10,000. So they didn't file their business, but their business made money. And that's just not true. I don't know where that $10,000 came from, because I can tell you that if you're self-employed, if you make $400, you are supposed to be reporting it on your tax return. So
you don't know where that came from. They saw it on TikTok. They saw it on TikTok, and then that became their gospel.
But I'm trying to figure out even who on TikTok said this, because 400 to 10,000 is a big stretch. So if the situation is new, work with someone to figure out if you're doing it properly, because tax problems don't go away. A lot of times people think that they can ignore the notices, but that's not how it's going to help you. The notices are going to get progressively worse. And so you want to make sure that you understand what those notices are saying so that you can tackle it right away.
Okay. Good. So if y'all don't know, I'm a clownster, right? But so many times people will see something on social media, be it TikTok, Instagram, and most of the time these sources are not even like valid, vetted sources. It's somebody who is trying to go viral, and they'll say the most ridiculous thing, and then people will swear about it just because it got 210,000 likes, and then they was like, okay, well, that person said it to be true, and it should be true. Instead of trusting someone who actually has the expertise and the education, right? So if you are following people on social media and you are just listening to random, you know what I'm saying, things that they're saying, just make sure that it's factual, right? Because everything you hear on social media is not true, and you can really get caught up. And I don't know about you, but I don't play with the I, the R, or the S, okay?
Exactly. And I tell people all the time, I'm like, you're a true accountant, a true CPA, a true tax professional. They're going to give you the answer. If you ask them something on social media, it's always going to be the attorney answer of it depends. Because like I said before, every situation is different. So there's no way I can tell you what something's going to look like without knowing your tax situation and just assure you that, you can use this trust to pay for this. And another thing that people talk about online is trust, thinking that trusts pay no taxes. So they're like, put everything in a trust so you don't own anything. And I'm like, people don't understand. Trusts pay taxes just like you would pay. Like, I don't understand. Like, you're still going to pay taxes. So,
right.
And people forget that, or they omit it when they're talking about all these things on social media.
Yes, good old social media. It's good, but then it can also be bad.
You just need to know and there's nothing wrong with hearing something and then taking it to your tax professional and being like, oh, does this apply to my situation? And seeing how that works, instead of hearing something and going to do it because you just think that you can figure it out on your own.
Absolutely. And that right there is actually a good suggestion. Like if you do hear something, because y'all, somebody said this and it has always stuck in my head. People be loud and wrong.
Yes.
And you just think because somebody is loud and wrong, and they be bold most of the time.
Yep.
you think, oh, okay, well, so and so said it, and that's their truth, and you take it. Well, go to your tax profession and have a conversation
Exactly.
and say,
Go see if it
hey,
applies to you.
right, absolutely. So, what are some smart moves people should be making right now before the end of the year to avoid stress or surprises during tax season?
Yes. So make sure you get organized. Start to think about what you did this year, what your numbers look like, so that you have kind of an idea of what your tax situation is going to look like. So start gathering stuff. If you are a small business, start making sure that you have collected all of your deductions and make sure that everything is kind of looking like it should be. The second thing I want you to do is make sure that you're taking advantage of everything that you can. A lot of times, business owners think that things are out of reach. So when you're an employee, your employer offered you like a retirement plan and you kind of contributed to that, they matched it and all that stuff. A lot of small business owners aren't taking advantage of the fact that now that they are a small business, they are the employer and the employee. And so that makes that they can contribute to retirement accounts. There are different retirement accounts, but it's still available to small business owners. And so just because you have a small business doesn't mean that you lose out on these retirement accounts. So making sure that you understand retirement accounts are something you can contribute to as a small business, making sure that you understand the deductions that are available to you. So the government allows you to write off anything that's ordinary and necessary for you to run your business. So that means that if you are spending money on something for your business and it's something that makes sense for your business, make sure you're taking advantage of it and writing it off. So many times people, taxpayers come and they're like, oh, I didn't write that off because I didn't know that was for my business. And I'm like, well, what did you sign up for Strike for or whatever software?
Right.
And they're like, yeah, I do it for my, and I'm like, well, that is literally for your business. Like they just are afraid to write things off. And if it's for your business, you're able to write it off. So don't lose out on that money. A lot of business owners don't realize the benefits that their home has for them when it comes to their business. So if you're working from home, have a home office, you can write off part of the expenses for your actual home. You just have to make sure that it's a designated area. So it doesn't have to be a full room, but it has to be a designated area. So it can't be your kitchen table because obviously you eat dinner there. But if you have like a large closet, for example, and you have a space that you built off, a lot of people start their businesses in their closets.
Right.
You would take that square footage divided by the total square footage of the home, whatever percent you get, you're able to write off your home expenses for the business. So you're using internet, you're using cable, all of these things that you're using, these are expenses, your electricity that you're using for your business, but your home is paying for it. So you can take a portion of that and write it off in the business. So understanding that that's not some far-fetched thing, you just have to make sure that you're doing it the right way. And again, you don't want to miss out on these expenses because it's going to reduce the taxable income that you have. So it's going to reduce the taxes that you have to pay.
Okay. That's a good tip. About the utilities and things like that. Okay. And then I know one that always come up and often, and I think you and I had talked about this is, let's say if you are a business owner and you have children.
Yes. So this is one of my favorite tax strategies business owners need to be aware of, that you're allowed to hire your children. So, and there are certain tax benefits that come along with it. So sometimes I get the question all the time, can I hire my children in my business? And my answer is always, yeah, it depends on your business entity structure, but it also depends on what they're going to be doing. So you just want to make sure that it's a bona fide job. So create a job description of how they're going to help you. If your daughter is 12, 13, they can help you with social media. That's not far-fetched. They have phones. They know, well, no, mom, you're not supposed to do that here. You're supposed to put the camera over here. Like they can help you with social media. So you can pay them. The tax benefits that you get is when you hire your child in your home business and they're under 17, you actually don't have to withhold Social Security and Medicare. So you don't have to have the withholding taxes come out. So that's because it's under the assumption that, you're taking care of them. And so they don't have to pay into that stuff. It's also state specific. I think Washington state, even when you hire your children, you have to have like, what's it called? What's that? Employee compensation. It's like a insurance thing that you have to have. I think only Washington state imposes it. But everywhere else, you don't have to do it. It's like a liability insurance thing that you have to have for employees, but you have to have it even if you're children. I think there was a case where somebody got sued, and so they basically have to do it. But you don't have to withhold taxes, and so you're able to pay them without withholding taxes. And what this does is it gives the business a deduction because you're paying them a real salary. This now it has to go to their account. It's not one of those paper things where you just say it on paper, I paid them. It actually has to go to their account from your business. So you get the deduction of hiring your children. And let's say you pay your children $13,000. You pay your child $13,000. On the flip side, your child now has earned $13,000, but they don't have to pay taxes on it because when they file their tax return, if they file a tax return, they have the standard deduction. So they're not going to have to pay any taxes on that income. And another great thing, a third benefit of hiring your children in your business is that your children now have earned income. So that means that they are now able to contribute to a Roth IRA. So that limit is $7,000. So imagine your 12-year-old or your 7-year-old contributing $7,000 every year to a Roth IRA. By the time they are in their 30s or 40s, they can have $1 million because of compounding interest. The thing is, to contribute to those accounts, you have to have earned income. So it can't just be like they can't just have money in a bank account and contribute. They have to have a job. They have to be earning income. And so that's a third benefit that people aren't talking about with hiring your children. So on top of them having a job, helping you with your family business. So, that pride of my mom has a business, my dad has a business, I'm helping them in their business. They now can be contributing to the retirement accounts. And so that's a blessing in itself. So you can definitely hire your children in your business. You just have to make sure that it's a real job, that it makes sense for their age, and that they're actually helping you, and that they're actually being paid into their account. So this can work for a lot of different businesses. I know people who hire infants, newborns, because they hire them for modeling. If they have clothing and stuff, the kids are modeling it for their social media platforms, they can hire them for that. I know someone who has a speaking event, and her daughter, I think she's 4 or 5, and she spoke at the event. So she had a topic for child entrepreneurs. And so she got a speaking gig. So now she made $10,000 as a speaking gig, and there you go.
Gotcha.
So
okay.
You can definitely hire your children.
That's amazing. That right there is I consider that to be a tax hack, right? Because a lot of people don't know that. So Zaria turns 17 next year, so
yeah,
I gotta work on getting her.
Yes. And I mean, some of because like I said, with withholdings, that's one of the benefits. But even when she turns 17, 18, she can still be an employee. You would just have to pay her like you pay anybody else. So she would get the withholdings coming out and all that stuff. But as long as you're still strategic about the amounts that you pay her, she won't have to pay additional taxes.
Gotcha. Okay, that's good. That is good. Okay, and for women juggling work, family, and personal goals like travel, what are a few simple financial habits you recommend to stay prepared?
Yes. So I know budgeting gets a bad rep and all of that, but I do like the habit of knowing where your money is going so that you can track it and be in control. And so I am of the school of thought that if you want to go on a trip, have an account set aside for that trip and save however much you need to get to that trip. Save it every paycheck, every time you get a client. Make sure something is going into that account so that you can fund it without issues. I know that there's a lot of hacks nowadays with credit cards and all that good stuff, but I just like planning for trips and knowing what it's going to look like so that I can actually save by the time it has to come around. So I tell people all the time, you can plan for anything. You just have to know what the numbers look like, how much time you need so that you can know how much you have to save each pay period, for example.
And I definitely recommend that. I know I've shared this with y'all, and I follow the Budgetnista as well. Yep. And I know that's one of her tips that she and with these bank accounts, y'all can create bank accounts literally online, and you can literally designate an account. This is my travel fund account, or you can name it whatever you want to, right? but pay it like you would pay a normal bill, like your mortgage or your
Yep.
car payment or etc. And that really, really adds up.
Yeah.
Awesome, awesome. How does better tax planning and financial awareness create more freedom for things like travel, rest, and experiences?
Yes, that's a great question. So we focus on being proactive with your taxes. So what we do is we want to make sure that you understand what your taxes are going to look like, so how you can reduce your expense. And that planning actually helps you figure out what your goals are, what it is that you actually want to spend your money on. Some of the strategies that we go over with our clients when they're traveling is how to make your travel, make sure that it's a write-off for your business. So what things you need to put in place, what steps you need to put in place, what meetings that you need to put in place so that this trip can actually be a business write-off, because that is going to be able to reduce your tax liability and help you travel to where you need to travel. So it's really just knowing that you have to be proactive. It's not something that you can do after the fact, because you have to have things in place. You have to have meetings set up. You have to have a conference that you're going to. You have to have these things in place beforehand. And so it's making sure you have a plan. When it comes to tax strategy, I like to give the analogy of like a puzzle versus a blank canvas. So when you have a puzzle, you can have a complicated puzzle. You can have a puzzle with 10 pieces, or you can have a puzzle with 10,000 pieces. But at the end of the puzzle, we all know what it's going to look like, because we have a box with a picture. So that's what tax preparation is. That's when you go to your tax preparer. Your situation might be complicated. It might take a little bit of finessing to make sure the pieces, to put it together. But the year is closed, so we know what the picture is going to look like. It just takes a while to get it together. That's tax preparation. That's when you go to your tax preparer and you say, okay, it's now March, January to December of the prior year closed. I need to file my tax return. Whereas tax strategy is like a blank canvas. It's saying, what do you want this picture to look like at the end of the year? And so that's when you work with your tax professional throughout the year. You have goals, you know what you want to hit, you know what you want to save on your taxes. And so you put strategies in place and you make that picture look like what you want it to look like by putting the strategies in place throughout the year, by understanding what your tax situation could look like and how to reduce things and how to mitigate your taxes. And so tax strategy, tax planning is really taking that blank canvas and making it look like what you want it to look like. And so by being proactive, you're able to say what the picture is going to look like, and you have a say in that, as opposed to the other one. You're going to owe whatever you owe because the year is already closed. If you're only speaking with your tax professional one time a year, and that's at tax time, you're not going to get any tax savings.
Gotcha.
You're just going to have to pay what you're going to have to pay.
Okay. So recommended steps going forward is, if you want to be more of the strategist, meet regularly or whatever schedule you have with your tax professional, so you are not getting no surprises like, oh,
exactly,
my tax bill it doubled, or
exactly.
Okay.
So you want to make sure you're meeting with them throughout the year, and so that they know what your goals are, so they can tell you what your tax liability is going to be, so that you guys can work things out on how to reduce it. Far too often, you're speaking to them when it's too late. So many times we get new clients, and their number one reason for coming, they're like, they never helped me reduce my tax liability. And I always ask them, I'm like, how many times did you meet with them? And every time, 99% of the time, they'd be like, just at tax time. And I'm like, well, that's not their fault. There's nothing that they can do at that point. You need to make sure that you're speaking to them throughout the year so that you guys can actually come up with plans. I do want to say that obviously meeting with them throughout the year, strategy does cost more than just the preparation.
Right.
But it's the give or take. What is your goal? What is your ROI? You can pay for a tax strategy plan and your ROI be 900%, because if you pay $4,000 and then they save you $60,000, you just made money by paying that $4,000. Whereas if you don't do any planning and you get a tax bill for $60,000, you just have to pay $60,000. So
gotcha. Yeah, well, when you put it like that, yeah, that's a big difference, right? So that minimal investment is reaping you,
all the benefits,
right? And our ROI, for my people who might not be in the business arena, is return on investment. So Awesome. Awesome. Okay. What is one common myth about taxes or income that you wish people would stop believing?
Hmm. So one common myth to me when it comes to taxes, I think a myth that a lot of people in my community that they have to pay the number that is told to them. So far too often they just think, oh, I have to pay this number and that's it. That's not how it works. Chances are there is a deduction. Sorry, I feel like I have to sneeze. Okay, it didn't come. But far too often, if they get a tax notice and it says, okay, you owe $10,000, people in my community are the quickest to pay that $10,000 without speaking to a professional to see, well, is this $10,000 even right? Do I owe this amount? So thinking that the number that they're given is like the final number, I think that's like the biggest myth. There are things put in place to help protect you when it comes to as a taxpayer. So you need to be aware that there are statutes. They could be trying to collect something that's outside of the statute. So you actually wouldn't be owing that balance. People make mistakes, right? Like
Right.
the government could have made a mistake with your tax return when they assessed it. So that number might not be what you need to pay. I think, I don't know if it's my community just hears government and they must be right, I must be wrong. And so they just assume that they're automatically wrong. And whatever the IRS says or the state says, that number
Law.
is what they have to. It's
Right.
the law. Yeah. Like, yeah, they're the law, but you have rights and you can look into it. And so I feel like the number one myth is that there's nothing they can do about the tax debt that they owe. Like that there's nothing, like it just is what it is. And that's just not true. Like there's
So you know what?
something that you can do.
You made me think of something. So like you know how sometimes you'll see announcements of people who owe massive amounts, and
Yeah.
then these people will say, "Hey, we were able to save this person like 80,000 or stuff like that."
Yeah.
So speaking to that, those individuals, we're gonna say theoretically speaking, you know what I'm saying, was probably somebody who looked at their tax bill and determined like what they could do to reduce it.
Yep.
Okay.
Yeah. So that's comes into tax resolution. And so tax resolution is typically when you need something resolved with the IRS or your state. And so in some cases, when there's a balance that's due, you might not owe the whole balance. The whole balance might not be applicable to you. So there are situations where there are spouses who owes that balance, and the spouses aren't together anymore. That might be a scenario. It might be that it's outside of the statute. So if you did owe $30,000, but it was from 12 years ago, then their 10-year statute has expired, so they can't collect that. But if you don't know those rules, if you paid the $30,000, they got their money. They're not going to give it back to you. Like it's not going to be. It's one of those things where you need to make sure that you're working with someone who can tell you what the deal is. So just because you get a notice, it doesn't mean that you do owe that balance. We need to make sure that you actually do owe that balance. We need to make sure that they can actually collect on that balance. And we need to make sure that you can actually pay that balance. So one of the key factors in those stories that you were talking about is a lot of times people incur a tax balance because let's say their business did amazing one year. And so they made a lot of money. So now they have a big tax bill. But the next year, and they weren't good with money management. And then like going into the future, their business kind of dwindled down. They had to close doors.
Right.
They don't have the funds anymore to pay that. So yes, they might owe the balance. It might be within the statute, but their livelihood has drastically changed. So the government does take into consideration, where are you now? So yes, you did incur this balance in the past, but where are you now? Can you actually afford to pay this balance now? And so they're going to do assessments on your current situation, even though the balance was from the past. And so in those scenarios, a lot of the times the situation has changed in the taxpayer's life. And so they qualify for it to be reduced because frankly, they just cannot pay it anymore.
Oh, wow. Okay.
And so those are things that the government looks at. So in those scenarios, yeah, they did owe it. It was within the collection, but maybe their financial situation changed. And so their disposable income now went from $10,000 to $2,000 if the government wants that 2,000, they're going to have to enter into some kind of agreement to see how that 2,000 can be applied, because you can't do the 10,000.
Okay. Okay. How you broke that down, it was very easy to understand. I didn't realize that regarding if somebody owed because of, you know, they had a few good years and then yeah.
Yeah.
Okay. Now, I guess the next question is along those lines. If someone feels behind or overwhelmed about taxes, what is the first step they should take today to get back on track?
Ooh, I love this question. So I am the eldest of 5, second of 6. If you caught what that means, great, because that's what I say. So I am a big sister at heart. So I'm the eldest of 5, second of 6. I take my role as big sister very seriously. And so what that means is there's never any judgment when it comes to me and my clients. So I don't typically dig into, well, why are you late? Why are we we don't do that. So we try to figure out how we can just move forward. So if you are behind, if you are getting notices and you're getting overwhelmed, you're getting anxiety, my first thing, if you can hear my voice, is to breathe and realize that everything is figure outable. You can deal with this, but we do have to deal with it. So you cannot ignore it, but your first step is to breathe and realize, okay, I need to take care of this. So whether that's you being 3 years, 4 years behind on filing your taxes, okay, you're 4 years behind. We can file 4 years of tax returns. It can be done. You just need to take the initiative and say, okay, I need to basically handle this. If you have 20 notices that you have not opened because you're scared, people get scared when they get a letter in the mail from the IRS.
Yeah.
They're just like, I don't know what this is, and they don't open it. Take a breath and open the letter. And even if you don't understand it, open all the letters so that you can bring them to the person that you're going to work with to help you solve this issue. But the first thing we need to do is breathe. Stop beating yourself up for what you did in the past. We can't change it. I'm like, there's no point in beating yourself up.
Water under the bridge.
It's breathe, and we're going to tackle this now going forward. There's not even a point in you beating yourself up. Why didn't I file? Now I can't file. Everything is figure outable. I tell people all the time, people get stressed and anxious when it comes to taxes. And so much so, people do drastic things, like when they owe a whole lot of money. And I tell people all the time, I love my job. I think I'm pretty good at my job. But I know people who work on people's brains. I'm connected to doctors. Those are scenarios where it's life or death. I am not working in a life or death situation. You're stressed, and I get it, but we can figure this out, and then you can go to sleep at night. I don't have the stress of knowing that I'm operating on somebody's brain or somebody's heart. So everything is figure outable. We can figure it out. We just have to actually take the time to take a second and assess what the situation is so that we can move forward. So if you're listening to this and you have back taxes, people have back taxes for 10 years. Trust me, you are not the only person that hasn't filed their taxes. So just take the time and say, okay, I'm going to take this time to meet with someone to get these past 5 years filed so that you'll feel better. But don't beat yourself up.
Yeah. And you said something that was such a big human element, right? Is I'm not going to judge, right? Because I think a lot of people think because they are in their predicament or their situation, how would I be viewed? Yeah. How will they look at me? How will they talk to me? Will they belittle me, ridicule me, or make you? Because, some people's personalities can be a little blunt. But like you said, we're going to figure this out. Bring the tax notices to me so that we can figure out a bigger plan to get you where you can actually have, you know what I'm saying, you're not so stressed. So I like that you shared that, because I think a lot of times us being human, that's the first thing we think, okay, they're going to judge me. They're going to talk about me. They're going to, question, why I did this, right? So that's good. Okay. My very last question, how can people connect with you or work with you if they need help this upcoming tax season?
Yeah, so you can connect with me. It's the Savvy Accountant across social media. So if you reach out to me on any platform, I'll respond to you, or you can schedule a free call. I'll make sure that Zondra gets that link. But we are accepting new clients. And so if you send me a question, we have a free discovery call. So when you get that link, everybody can book their first free discovery call. You let us know what you are kind of dealing with, and we can see how we can help you.
Okay, good. So I did drop her handle in the chat.
Okay.
And she's on all social media platforms. So for my TikTokers, as my sister said, she's over there. Of course, she's here on Facebook, Instagram, and you're on LinkedIn too, right?
Yeah, I'm on LinkedIn. So yeah,
Okay.
you can send me messages there. I'm not super active there, but I'm there.
Okay. Gotcha. Okay. And so I know a lot of y'all will catch this on replay. So again, if you have any questions that was, like kind of piqued your curiosity, and you're like, oh my goodness, I want more about that, then that is a big indicator that you need to schedule your call with her to get on her calendar. As she noted, the first call is complimentary, and she knows her stuff. Yeah, I know anytime I bring people in, I make sure they are legit. I make sure they are vetted, and they are some very, very ethical and very smart people. Okay. So again, Ms. Atiya, I want to thank you so much for taking time out of your busy schedule and just coming into the community and talking about these things that we discussed today, which is helpful for several people. If you are a business owner or if you are not a business owner, because a lot of stuff, I learned some new stuff, right? I'm like, oh, I didn't know that. So, so if you would make sure you follow her on all platforms, and then if you have any questions and you need her contact information, you can reach me via DM or email. And do you have anything that you want to say before I let you go? I know I kept you longer than expected. You were such a good trooper.
Oh no, you're good. Yeah, I just want to tell people, when it comes to your taxes, your tax issues, just know that everything is figure outable. So don't think that you have to do it alone. Make sure you're working with a tax professional that you trust. Make sure they're able to explain your situation to you in a way that you understand. Run very far away from anybody that tells you, I'll handle it all, don't worry about it. Those aren't the people that you want to work with. You want to work with a professional that is working with you, because you guys are going to be partnering on this to solve your issue. You need to be aware of what's happening, and nothing is above you. Like I tell people all the time, this is not brain surgery. So they should be able to explain what's going on in your tax situation to you in a way that you understand. And if they can't, then find someone that you are better aligned with.
Yes. And I'm glad she said that, because a lot of times, like when it always happens around this year, or somebody will say something, and then they'll say, well, I had no idea she said or he said they was going to take care of it. And I'm like, okay, but your name is still on that tax return.
Yes.
You allow somebody.
You signed that.
Yeah.
It's like, this is your signature here. So yes.
Yeah. So, even if you feel like you don't know anything about it, this is not your area of expertise, before you sign off, please
ask questions.
Know what you are actually signing off for, so you won't get surprises and you go to somebody else with your tax return and they say, do you understand what's been going on the previous year or years?
Yeah. So I actually had one of those where I was working on our strategy, and I was like, yeah, we were able to save you this because this was reported wrong, and it was reported wrong for the 3 years. So
wow.
Yeah.
Oh my goodness. Yeah. So again, y'all, I was not a big fan of using a tax professional when I didn't have a business, because I like she said earlier, my situation was very simple. I only had a house, kids, that's it. You know what I'm saying? I didn't have but when I got a business, I was like, hold on, this is complicated. Like, this is a lot of stuff going on. So if you are trying to navigate this space and you're trying to figure out who you should work with, I highly, highly recommend Atiya. She's very professional, very communicative. And again, with everything that's going on these days, and I know y'all see the stories, you just want to make sure that you are in alignment with the person and they actually know what they're doing. So again, sis, thank you so much for spending some of your Thursday with us. And again, y'all follow her on all social media accounts. I'll be back live in January with another guest. And right now I'm still working on the dates, okay, but it will be shared via email. If y'all feel there's a topic that we need to discuss, remember, you can always email us so that we can see what we can do to get that person on the calendar. We do have a group trip that we are releasing going to Bali, Indonesia. If you want those details, at the bottom of the banner, there is a link that you can go to check it out to see if it's a good fit for you. I will start having informational sessions just to kind of give you the backstory about why Bali, the things we're going to do, how we're going to move, and etc. Okay. Other than that, thank you, and I will see y'all in the group. Because remember, we got the Travel Preparedness Challenge. So I got to go live. So I'll be in the group in a little bit. So again, thank you so much. Bye.
Thank you. Bye.